Europe's debt crisis has worsened. Ireland has joined Portugal and Greece as the third Eurozone nation to have its credit rating downgraded to junk status. And there are growing fears that Spain and Italy are headed the same way. Meantime, China's economy is still growing. Karen Barlow reports.
While temperatures rise in the European summer, some economies are boiling over. Following Greece and Portugal, Ireland has had its credit rating downgraded to junk status, rattling global markets.
Well, they're worried, and they're worried not least because, in part as a result of the regulatory response to the global financial crisis of 2 years ago, banks have been taking on more sovereign debt in their own countries.
EU finance ministers have again met to sort out Greece, with fears the rest of Europe is being dragged down into economic and social turmoil.
It is very urgent that the Eurogroup come to us with proposals on stopping the risks of contagion.
For the first time, some form of Greek default has been considered. The Euro finance ministers say it may be the only way to secure Greece a second bailout.
We made it clear that above and beyond Greece, we are resolved to do everything to stabilise the Eurozone as a whole.
It's feared the large European economies of Spain and Italy may soon also require bailouts.
Spain and Italy are the third and fourth biggest economies in the euro area, and the cost of bailing them out, if it actually came to that, would certainly wipe out any funds that the European Central Bank and other European authorities have thus far indicated that they're willing to put behind the bailout of the three smaller countries.
French and German banks also have significant exposures to Italian and Spanish debt. With European stocks down, Italy's finance minister is expediting austerity measures.
I'm going to Rome to close the Italian budget. Thank you.
It's a very different story in China. In the second quarter, economic growth has slowed slightly, but the world's second largest economy is still powering along at 9.5%.
Although part of the indicators registered a reduction, the overall economic performance of China is good, and China is shifting from fast development driven by policy to self-driven, healthy development.
And a growing China is good for major trading partner Australia.
It's certainly to be hoped that China succeeds in stabilising its inflation situation in fairly short order without needing to take drastic measures to curtail growth.
The Australian dollar and share market ended the day higher, but consumer confidence has fallen, taking it down to the same levels seen during the global financial crisis. Karen Barlow, Late Line.